blanket booster programs are likely to prolong the pandemic rather than ending it.
There is a reasonable likelihood that the Russians will engage in some form of escalation.
We'll stand ready to act one way or the other.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London, standing in for Francine Lacqua. Here is what's coming up in and on today's show. The top stories: Omicron optimism. A study shows hospital risk for the variant is 2/3 below Delta. The US approves Pfizer's COVID pill. It's the first of its kind. European stocks point moderately to the upside. Traders continue to hope that the recovery can weather Omicron. Plus, investors await President Putin's annual news conference for clues on Russia's energy policy. We are live from Moscow throughout the hour. First, let's check in then on the markets. It is risk on, with all the caveats that liquidity and volumes remain light as we head to the Christmas holidays this December the 23rd. The handoff from Wall Street was positive, the handoff from Asia as well, and you're seeing gains across the European space. And a lot of this, as we've said in the headlines, is about this emerging view of Omicron and how it could be less of a threat in terms of hospitalizations versus Delta. A couple of studies coming in to support that. And then you have the Pfizer pill as well being given the emergency use authorization stateside. We'll see when that comes into play in Europe and the UK as well. Still awaiting for the time frame on that. The European stock 600 gaining 0.4% now. Travel and leisure is a big factor on that. We'll look into that shortly. In terms of the spread between the Italian 10-year and the BTB and the Bunds, that is in focus, of course, because you have concerns, at least not concerns, but you have a view, of course, that the ECB, it's made it pretty clear it's going to be winding down its PEP program in March. Now, Christine Lagarde has said she's not ready to hike rates in 2022, but of course the concern comes in when you think about those peripheral nations, the peripheral sovereign debt, and whether you get pressure on those yields for the likes of Italy and Spain. In terms of what's happening in the Brent and the crude and the oil space, you did have those inventories stateside coming down. Then you have to factor in maybe some optimism that some of these restrictions could start to ease. We're not there yet, but of course, if you have a less impact for Omicron, that is going to be positive for travel and leisure, that demand then for oil. Currently down 0.3% at $75 a barrel after some upside yesterday. Bitcoin is down 1.5%, currently at $48,000 per Bitcoin. Let's change it up and have a look at what's happening across the European space. You had some divergence in the early part of the session. It was the FTSE 100 that was under a bit of pressure. That has now switched over now. You're seeing gains of 0.1% here in the UK. The DAX is gaining 0.4. The CAC Cajon is up 0.2%. And Spain as well, posting gains of 0.8%. Let's break it down and have a look at how things are breaking down sector by sector then. And as I was saying, it's travel and leisure that is powering the gains now, gaining more than 2%. Well, we're waiting for President Putin's comments as well on energy, see how that plays into the European space as well. The banking sector, yields, of course. Have the banking sector, has it dislocated from the need for higher yields? That is a debate that continues. The stock 600 banks gaining 1%, even as yields remain relatively capped, certainly below those 150 levels. In terms of what's happening within the corporate space, Philips is one story. It is providing an update. It's provided an update on ventilators that were recalled due to health concerns. That update renewing at least some of the views on that company to the upside, gaining 5%. And Flutter, this is the online betting company. It is looking to make an acquisition. It says it will make that acquisition by the second quarter of next year for Italy's Sisal. It's about £1.6 billion. It's going to expand its geographical footprint. And you're seeing gains there for Flutter of 3%. OK, let's bring in some of our market experts to dig into these issues about the catalysts behind these markets and look ahead to 2022. Bloomberg's Christina Aquino and Nina Scarra, CEO of the Centre of Economic and Business Research. Christine, let's start with you on the market moves that we're seeing today, the optimism around the changing view on Omicron and whether or not this can be sustained, with all the caveats, of course, around volumes and liquidity.
Playing into good news for markets today, especially because we started a week on such a risk-off note, right? And that really just shows how markets in this current environment are very much primed for any news related to Omicron and very much following those minute developments, even just within the span of this week. You know, we started risk-off as we saw more news of lockdowns, and then sentiment turned very quickly when we got more encouraging news from Moderna. Very similar picture today when we're seeing bits bits and pieces of positive news with regards to the lower risk of hospitalization for Omicron and other better news regarding boosters. And so I think this is very much the flavor of markets at the moment. Any minute development, whether it's positive or negative, will be taken into account by markets, because this is very much front and center of how investors are thinking about their outlook, especially heading into 2022.
And Nina, this has such important implications for the consumer, how confident the consumer feels. We saw stateside the consumer sentiment index picking up. That was seen as a positive, obviously, by the markets in the US. How should we be thinking about the impact on consumers of Omicron?
Well, consumers are looking out for much of the same stories and signs that markets are. And I think that's coming into the market response as well. It's not just a question of, are there going to be restrictions? It's also a question of, if there are restrictions, and especially if the restrictions aren't a matter of law, if they're advisory, and if it's more recommendations for caution rather than actual lockdown type rules. The question is, how are consumers going to respond? We have seen some signs of consumer caution, especially amongst hospitality and brick and mortar retailers in the crucial holiday period. But overall, consumers have become quite well versed in living these times of uncertainty. And I think the appetite for any more bad news and any more restrictions is certainly waning in the US and in Europe as well. And I think even if we are seeing a turbulent period for consumer confidence, I think there's going to be even more resilience in consumer expenditure than we saw during the first wave of restrictions.
Where does that leave your outlook for the UK economy for next year?
At the moment, we actually haven't revised downward our UK outlook as a result of Omicron. We're expecting the UK to grow around 4.7% in 2022. And if there are additional restrictions put into place beyond January, we would be looking to revise that downwards, but not notably so, given what the points I've just made. There actually is quite a lot of resilience amongst businesses and consumers in terms of how to respond to any lockdowns. So if there are further restrictions, there's certainly going to be a hit on some sectors, primarily around culture, hospitality, the sectors, especially in big cities that rely on tourists and that on large audiences and close interactions. But even those, we wouldn't expect, based on all of the latest data that we're hearing, much of an impact beyond the first couple of months in the year.
And Christine, travel and leisure, the standout sector today, as investors weigh up what looks like a less severe variant. How are you assessing what is happening within that space? Ryanair coming out as well, interestingly, in downgrading its outlook, coming out with a bigger loss forecast for the 12 months to March.
Exactly, Tom. And I think, we're in this period where we're getting a little bit of mixed messaging as far as the longer term outlook for the sector is concerned. And I think, short term, very much encouraging the headlines that we've been getting. We see travel and leisure easily the best performer within the Stock 600 today and also this week. But then if you zoom that out to a year to date chart, you also see that that's the worst performing sector. I think it's less than 1% in terms of its gains versus the other sectors. And again, we have the likes of Ryanair warning on profits, especially heading into next year. That could be a hint of caution as well. It'd be interesting to see if we see other carriers follow suit, and also if we get a full picture of the holiday season, given that it is expected to be less buoyant than was initially projected by both the companies and consumers as well.
Okay, Bloomberg's Christine Aquino and Nina Skero staying with us. We'll get more insights on the economic outlook from Nina in the next couple of minutes. We're going to bring you live pictures of the Russian President Vladimir Putin, who is in Moscow for his annual press conference. He's expected, of course, focus on anything he has to say about the energy markets, given the very significant run-up in gas prices that we see, the essentiality, the essential role that Russia plays in supplying energy to the European market, of course, anything he says on that front. And then on the geopolitics, The overlap, Ukraine, the build-up of Russian troops on the Ukrainian border amid very deep concern in Washington and in Brussels that maybe Vladimir Putin is preparing to invade that country. You can see journalists and other people there gathered for this press conference, sometimes runs up to 3 hours. We'll be on the ground live for that. In fact, let's bring in Bloomberg's Russian government reporter, Jake Rudnitsky, to discuss what we should expect as President Putin prepares for that address. Jake, what are the top things for you that you're going to be focused on?
Well, first, if it only lasts 3.5 hours, I think we'll be very happy in the Moscow bureau. The longest one of these has gone on for nearly 5 hours. We're obviously going to be paying most attention to any geopolitical hints. Russia has been at odds with the West and has really built up, nearly 200,000 troops on the Ukrainian, right on the Ukrainian border. The U.S. and NATO have suggested that this means that they might be planning to invade. So any indication Putin gives us on his thinking about that will be interesting. Yeah. Again, this press conference is a bit of a carnival atmosphere. I mean, there are going to be over 500 journalists in the hall. People hold up signs trying to get his attention. So he's going to be switching from very minor issues about, plumbing issues in Siberia to potentially, new Russian weapons or giving some indication of what his plan for Ukraine is.
OK, yeah, that's quite the spectrum, isn't it? From plumbing issues in Siberia to new weapon technology. You can see the journalists there in vision now holding up signs, trying to get the president's attention when he comes on stage. When it comes to energy, do we have any clarity, Jake, on Vladimir Putin's position on the supply of natural gas to Europe?
Well, Russian gas supplies have actually been dropping in recent days after they filled they've kind of fulfilled the quotas for gas contracts. And so Putin's position, I think, has been fairly clear. If you give them, if they register the Nord Stream 2 pipeline, which would directly ship gas from Russia to Germany, then suddenly there's going to be plenty of extra capacity, Russian gas flowing there. The Germans are in no rush to do so. They've put a bunch of bureaucratic hurdles up. And I think it would make sense that first we need some sort of resolution of what's going on with Ukraine and better idea of what Russia's plans are, because it would be hard to imagine if there's any sort of aggressive acts or war in Ukraine that Nord Stream has much of a future.
OK, Bloomberg's Russian government reporter Jake Rudnitsky, who's going to be across this story for us, of course, over the next few hours. Will be coming back to Vladimir Putin and that press conference over the next hour or so. Coming up, as we put 2021 behind us, we try to assess the risks facing us in 2022. There's quite the list. That is next. This is Bloomberg.
Has been seriously affected by its battle with the COVID pandemic.
OK, welcome back. We're seeing live pictures from Moscow, where President Vladimir Putin is holding his end-of-year press conference. You can see one of the first questions being put to the Russian president there. We are very focused, of course, on anything he has to say about the energy markets, the supply of gas to Europe, but also the build-up of Russian military assets and personnel along the border with Ukraine. Let's listen in as we get that simultaneous translation and hopefully the first answer from the Russian president.
And another question. What do you think about the government's work this year and also the central bank's work? I'm sorry. I'm talking about central bank. There are actually several questions that have been asked, and I've always asked questions about the central bank, so I would like to ask that question. So to answer your questions in full, I would have to spend a lot of time. We could actually put an end to the press conference because they would take the whole press conference, colleagues. And of course our work, you're talking about our work. You say that the whole world has been trying to fight the corona infection, and this work continues, this battle continues. It is extremely dangerous. because there might be new strains developing. You know that Omicron is present everywhere. Our own experts are now visiting the South African Republic because there they discovered the Omicron strain of the virus.
Okay, that is the Russian President Vladimir Putin at his annual press conference. Can run beyond 3.5 hours. We've just started answering questions there about the domestic policy agenda and a question about the central bank. Let's get back to Nina Skero, CEO of the CEBR. Nina, when we talk about energy, the energy crisis across Europe, these sky-high prices and the supply by Russia of natural gas, how concerned are you that this is going to prove a significant, a material drag on the Eurozone economy come 2022? How much pressure is there? Is it adjusting and playing into a change in your forecasts for the outlook for the economy for the Eurozone?
The energy situation is certainly feeding into our inflation forecasts, and there are wider implications as well. But specifically in terms of the impact this could have on energy prices, we've already seen inflation across Europe at record high rates. And this is something we're expecting to continue into 2022, putting a real pressure on costs of living. And there are other inflationary pressures as well, from supply chain disruptions, from issues around logistics and delivery. So there are a number of risks, some of them feeding from the energy situation, that we're expecting to have an impact on the economy and on consumer well-being.
To what extent does that challenge the stance from the ECB, particularly Christine Lagarde, that there are going to be no rate hikes in 2022? Is the ECB going to have to reassess?
I think as facts change, their outlook and their guidance is going to change as well. I think from the Fed, from the Bank of England, we've seen quite a notable change in messaging, and in fact, a somewhat perhaps hurried hike from the Bank of England that was giving messages that there wouldn't be a rate hike as recently as a couple of days or a couple of weeks before their December meeting. So we've seen from other central banks that they've had to adjust their thinking at short notice. And I wouldn't be surprised if that proved to be the case for the ECB in 2022 as well.
Okay, Nina, that is the ECB, that is the Eurozone. We have a line crossing from this presser, Vladimir Putin saying that Russia's 2021 GDP growth is seen at 4.5%. As we get more lines, we will bring those to you and our audience, of course. Nina, when it comes to the UK and the reassessment, the assessment of the impact of Brexit, almost 12 months after we cut ties with the Eurozone in terms of the customs union, where do things stand? What is your assessment of the outlook for the British economy as you weigh up and try and unpick, I should say, the Brexit impacts with the virus?
As you rightfully point out, it has been quite difficult to assess what has been an impact of Brexit and what has been an impact of the pandemic. There has been work on comparing UK performance during the pandemic with the most comparable economies. And based on that, I think I would say that the most reliable estimates I've seen on the impact of Brexit on trade so far has been about 10 to 15%, which isn't too far off from what government's own assessments in the lead up to Brexit have said. Now, what I think we need to keep in mind on, and what perhaps some people don't realize, is that actually some of the implications on trade, for example, around customs documentation requirements, around closer inspections of goods crossing the UK borders, are actually only coming into place in 2022. So a lot of that hasn't been accounted for in the stats we've seen so far. So even though it is 12 months since Brexit, there are actually new rules that are yet to be implemented. So it's by no means something that has been put to bed. It's something we have to keep watching.
Nina Skero, CEO of the CEBR. We appreciate your insights. Thank you very much. Have a great Christmas and holiday season. Thank you for joining us. Okay, coming up, we're going to take a closer look at the risks posed by Russia in 2022 as Vladimir Putin hosts his end-of-year news conference. You can see live pictures out of Moscow. We've got more on that. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. We're bringing you live pictures of the Russian President Vladimir Putin out of Moscow at his annual press conference. A couple of lines that are crossed. Russia, 2021 GDP growth seen at 4.5%. That is from the President Vladimir Putin. In terms of inflation, Russian inflation this year expected at 8%. Putin also saying that he's concerned that lower life expectancy, that there is lower life expectancy. He's concerned about that. He says the central bank and the government deserve positive remarks. We'll bring you more from that presser by Vladimir Putin across the next couple of hours. Stay with us. This is Bloomberg. Welcome back. Here are your top stories. Omicron optimism. A study shows hospital risk for the variant is 2/3 below Delta. The US approves Pfizer's COVID pill. It's the first of its kind. European stocks point moderately to the upside. Traders continue to hope that the recovery can weather Omicron. Plus, investors look at President Putin's annual news conference for clues on Russia's energy policy. We are live from Moscow throughout the hour. Good morning on this December the 23rd. Welcome to Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London, standing in for Francine Lacqua. Let's check in on the markets then. It's risk on here in Europe with all the caveats around thinner liquidity and thinner volumes. You're seeing gains across the benchmark of 3 to 0.4%. We're watching the spread between the BTPs, the Italian benchmark sovereigns, and the Bund. It's widened on the back of some more hawkish comments from the ECB. We had our previous guest saying that inflation from the CEBR, inflation remains front and centre of a concern for the Eurozone, particularly amid these higher energy prices. The widening of the spread, of course, significant for those sovereigns. In terms of what's happening in the oil space, Brent, and you can't, of course, de-link oil from gas, Brent is down 0.3%, $75 a barrel. There was some upside yesterday on the back of lower inventories, a report suggesting lower inventories out of the US. And Bitcoin, $48,000, 300 for your cryptocurrency, down by 1.5%. Let's have a look at how things are breaking down on the map across the European space, with the UK, of course, in the mix. The UK was lower at the beginning of the session. It's turned around somewhat. The FTSE 100 is gaining 0.2%. You're seeing some significant upside in Spain. The IBEX up 0.9%. Travel and leisure is part of that. The IAG, of course, on the back of the optimism that Omicron is less severe. Travel and leisure gaining 2.5%. Three sectors in the red: food and beverage, consumer products, basic resources. That is the geographical picture on a risk-on mood here as we lead up to the Christmas holidays. Let's check back in then with Vladimir Putin, the president, of course, of Russia, at his annual press conference in Moscow. We'll focus on anything he has to say, of course, about the Russian economy, and he said it's going to grow 4.5% in 2021. Inflation, he's outlined that at 8%, but also anything he says about the energy complex, the supply of gas to Europe, and the geopolitics. So let's listen in to the Russian president.
During the pandemic, when we planned assistance to the most affected industries, 4.5% of our GDP. It's huge last year. And here, this year, 1%, so almost 5.45% of GDP. And this is not just giving money out with this support.
OK, we'll dip in again with the Russian president, of course. If he says anything significant, that is the Russian President Vladimir Putin speaking in Moscow. Let's get some analysis now, particularly on the geopolitical front, with Elisabeth Braw, resident fellow at the American Enterprise Institute. Elisabeth, you were telling me in the break how significant this press conference is in terms of getting clarity, at least a sense of the direction for Russian policymaking on everything from the economy to geopolitics. Front and centre when it comes to geopolitics is clearly what is happening on the Ukraine border. What is your assessment of the Russian stance as things stand?
So Putin, as you said, is holding a press conference at the moment. It's the political highlight of the year in Russia, and for us, Russia watchers. But this year, we already knew before it started that there would be a lot of interest in what he's going to say about Ukraine, because Russia is keeping up the pressure at the Ukrainian border. And what's interesting about that is that it's not just the risk of a war, and Putin has said that Russia would be able to invade Ukraine if it decided to. But already without invading Ukraine, it's causing a lot of harm to the country because investors, international money market are losing confidence in Ukraine. So he doesn't even have to do very much more than what he's doing at the moment.
So the economic damage is clear. You've outlined that in your notes for us, particularly when it comes to investors looking to Ukraine, those who are confident enough at least to have exposure to Ukraine. Is it your assessment at this point, therefore, that he holds off, that he can hold off on military engagement because the damage is being done, at least on the economy?
He can. Depends, of course, it all depends on how big his risk appetite is. But if you consider the risks involved with invading another country and as a result causing some sort of NATO reaction. Now, Ukraine does not have a guarantee that NATO will respond on its behalf because it's not a NATO member state. But some group of NATO member states including the United States, would be likely to respond in some way to Russia in case of an invasion. But short of an invasion, there's very little anybody can do because the Russian troops have every right to be on their side of the border, and yet Russia can cause a lot of harm by them being there. So I think the risk of an invasion is low, simply because there would be such a big fallout for Russia if it did cross the border, whereas now there is practically nothing anybody can do.
What is the economic resilience of Russia if they do face additional sanctions on the back of any military action?
That is one of Russia's vulnerabilities, because unlike China, it's not so big that it can sustain sanctions across its economy, and it's already a struggling economy. So that is a vulnerability. But we should remember that Russia's economy is far bigger than that of Ukraine, and also far more resilient because it's bigger. So it's the risk to the Russian economy compared to the Ukrainian economy of the current situation continuing are smaller. But I think that the risk that we should be looking at is Putin losing support among the country's elite, oligarchs, other leading people in the private sector, the business sector, who may say, well, we are not willing to put up with these sort of punishments from the West anymore. And I think that's what we should be looking at in the months ahead.
OK, and that takes us to negotiations between US and Russia. How seriously should we take Vladimir Putin's concerns and his insinuation, or at least his commitment to those talks?
He has played a weak hand very well in presenting this proposal to NATO and the United States. And it was interesting that it was to both, not just NATO, but to the United States. Russia clearly wants to be seen as an equal partner to the United States. And now the United States, the Biden administration has already said that it won't be negotiating about European security without the Europeans. So he has essentially turned down his proposal for talks between the two of them at the exclusion of America's European allies. But what he has done is essentially paint NATO into a corner, because NATO and the United States together will have to respond somehow, even though the US has already said it won't negotiate without the Europeans. But they will have to respond somehow to these proposals. And the proposals were quite radical, you might say, in suggesting that Ukraine and Georgia not be allowed to join NATO, for example. Now, NATO and the US will have to respond somehow to this, either by offering an olive branch or by saying, no, we don't tell which countries, we don't tell countries that they can't join NATO. So it's a very difficult position for NATO at the moment.
What is your sense of the unity or not within the Europeans when it comes to the issue of Russia?
It's, again, a very difficult situation. You have countries like the Baltic states and Poland feeling very strongly that NATO has to be assertive vis-à-vis Russia. Then you have other countries, including France and some countries farther west, that will say, okay, it's not our main concern. Our main concern is A, B, C, D, E, F. And we should at least try to engage more with Russia. We should cooperate more with Russia. And we should remember that NATO and the West more generally has a bigger looming threat, which is China. And it's another country that they have to figure out a joint strategy to figure out how to either work with China or deal more assertively with China. So there is a lack of unity within NATO, quite clearly. We have seen it also with regards to Belarus, where some countries felt that Latvia, Lithuania, and Poland were too assertive vis-a-vis Belarus. And so again, it's nobody's fault. It's that way. It's just where you're located in the world matters greatly, especially if your neighbor is Russia or its friend Belarus.
Okay. Elisabeth Braw, I'm very envious of the bookshelf behind you. Resident Fellow at the American Enterprise Institute on the analysis around the geopolitics of Russia. We didn't even get on to the vulnerability of Europe to those energy supplies from Moscow. But thank you for your insights. There's Vladimir Putin live at his press conference, annual press conference, taking a bit of a dig at the US, saying the Fed will have to do something about inflation. He said that Russia is looking at inflation of around 8%. He says, I'm not interfering in the central bank's work, the central bank of Russia and the Russian Federation, of course. But again, saying that the US Fed will have to do something about inflation. We will keep across the story as Vladimir Putin continues his annual press conference. Coming up, COVID 2 years on, as another year comes to a close, we look at how the crisis unfolded and what the future could hold. More on the virus and vaccines next. This is Bloomberg.
According to Bloomberg's vaccine tracker, roughly 3.2 million doses of the COVID vaccine had been administered by the U.S. by January 1st, 2021, far short of the Trump administration's goal of giving out 20 million shots before New Year's Day. And the global vaccine effort hit a snag in the spring when vaccines developed by both AstraZeneca and Johnson & Johnson were suspended over blood clot concerns. Within a few weeks, both shots were declared safe to use following reviews by regulators in both the EU and US. Before the end of April, Biden hit his goal of administering 200 million shots in his first 100 days, as vaccines had been made available to all adults. The fight against COVID was gaining traction in the summer as vaccines rolled out globally. That didn't last long, as the ultra-contagious Delta variant surged across the globe. By July, the CDC had advised vaccinated people to put their masks back on in indoor spaces as breakthrough cases rose and the agency learned that vaccinated people could still transmit the virus. In the fall, the FDA issued emergency approvals both for booster doses and vaccines for children aged 5 to 11. But late in November, global financial markets sold off after South African researchers identified a new, severely mutated COVID strain that had the potential to evade vaccine protection, the Omicron variant. In response, many countries reinstated travel restrictions from African countries. Japan closed its borders to foreign tourists from all nations, and UK Prime Minister Boris Johnson advised anyone able to work from home to do so. With 2022 on the horizon, the new year will bring with it a lot of uncertainty and big questions about the pandemic's future, including, will vaccines need to be reformulated, and can any ground be achieved without vaccine equity? Despite a pledge of more than 1 billion donated doses from the US, many countries have vaccination rates of less than 50% of their populations, and that's where the virus is most likely to mutate.
And that was a look at where we've been so far in this pandemic. Let's get an update then from Bloomberg and the COVID resilience rankings that the team puts together. South America and APAC have been rising up the rankings. You've got Chile at the top as Omicron hits Europe and North America. Joining me now to discuss the pandemic and that resilience ranking is Bloomberg's Rachel Chang. Rachel, what is the outlook then for COVID resilience in the developing world? Are they likely to be hit as hard by Omicron as we've seen in Europe and the US?
Yeah, I mean, I think it's inevitable that every country in the world will have to really face the challenge of Omicron. Some of the advantages the developing world does have is some of them are in the southern hemisphere. They don't get the kind of cold seasons that we're seeing in U.S. and Europe right now. So that will slow down the spread. You know, we do have places, Australia and New Zealand are in summertime right now. South America's in summertime right now. But December's #1 on the ranking. Chile, very much warm weather, highly vaccinated. But at the same time, you know, I think in the developing world as well, there's a real difference opening up between the access to vaccines and the type of vaccines that countries have access to. So a place like Chile, you know, they started off with the Chinese vaccine Sinovac, and they've moved really quickly on their booster shots, probably because the Sinovac was not that effective. But they've now boosted over 60% of the adult population, a lot of them mixing the mRNAs with Sinovac, which we know gives a high level of protection against Omicron. That sort of thing is not really an option for other developing countries like in Southeast Asia, where you have Vietnam, the Philippines, countries that have been at the bottom of the ranking for a long time, still struggling to get that first round of vaccines, and not to mention the booster shots. So boosters are going to be an increasingly important differentiator on the ranking into the new year.
OK, Bloomberg's Rachel Chang, thank you for those insights. The Bloomberg Resilience Ranking, well worth looking at on the terminal and on Bloomberg.com. Chile at the top, South Africa, Vietnam near the bottom. Let's get your Bloomberg Business Flash now with Leanne Gerrans. Leanne.
Tom, good morning and thank you. Intel has apologised after its opposition to Xinjiang labour sparked a backlash in China. The American chipmaker says it sent a letter asking suppliers not to use any labour or products sourced from Xinjiang in order to ensure compliance with US legal requirements. It says it did not mean to express a position on the matter. The statement comes after Chinese social media users criticised Intel, and the lead singer of a popular boy band said he would terminate partnerships with the company. A third dose of AstraZeneca's COVID vaccine has been found to significantly boost neutralising antibody levels against Omicron. Lab studies at the University of Oxford found a third dose produced higher levels of antibodies than found in individuals who had recovered from an infection with an earlier COVID strain. Tencent is to distribute nearly its entire stake to JD.com, worth more than $16 billion as a one-time dividend. The surprise move to divest most of its holding in China's #2 online retailer comes as Beijing punishes the country's tech giants for behaviour. And that's your Bloomberg Business Flash. Tom.
Leanne, thank you. Coming up, we take a look at the impact on finance and the City of London after a year of Brexit. More on that. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. It has been almost a year, feels longer sometimes, since the UK technically severed ties with the EU. Today, we are looking at the impact specifically on finance and the City of London, the importance, of course, of that sector. Joining me now is Bloomberg's UK economy reporter, Lizzie Burden. So, Liz, it's been almost a year. Where do we stand in terms of the impacts on the city as these negotiations continue?
Well, it's not been half as bad as some had predicted, but you have seen Brexit pushing finance firms to relocate some of their people, assets, operations to the continent. Now, it would have been worse, EY says, had it not been for COVID, because it's been hard to relocate during the pandemic. But you are seeing the growth of finance hubs in Amsterdam, Dublin, Frankfurt, and that's set to continue in 2022. The real loss, though, the immeasurable loss, is the opportunity cost of those jobs that are being created in the EU that, if it hadn't been for Brexit, would have been British. And British banks clearly need access to Europe and to doing trade there and business there. Where are we in terms of those discussions? Because there's still a lack of clarity. Yeah, before the Brexit minister David Frost quit and was replaced on the Brexit brief by the Foreign Secretary Liz Truss, he said that the equivalence decision talks had been put on hold. Now, you'll remember earlier in the year, we did get some progress towards mutual understanding, that's a largely symbolic thing. It's a framework for regulatory cooperation, a discussion forum for sharing information. But the reason we haven't got an equivalence decision yet is largely because of those tensions over Northern Ireland. And given that Truss has already come out guns blazing, saying that she'd be willing to trigger the Northern Ireland Protocol, Article 16, it doesn't seem like jolly mood music heading into 2022. OK, interesting insights there as we look back on almost 12 months since the UK divorced itself from the European Union, with a new head, of course, of those Brexit negotiations in Liz Truss, the Foreign Secretary. Thank you, Lizzie Burden, our UK economy reporter. We're going to check back in now with the Russian President Vladimir Putin, his annual press conference. Again, just to recap, he's been making comments about inflation, 8%, the economy at the end of 2021, 4.5% growth. But we are looking for anything specifically on the energy complex, the supply of nat gas to Europe, and anything, of course, that he has to say about that build-up of Russian troops on the border with Ukraine that DC, Washington and Brussels are so concerned about. Let's listen in then as he is peppered with more questions in what is meant to be, expected to be at least a possibly 3.5 hour press conference.
Afford thousands dying on a daily basis. Can we afford that? Those figures? Maybe some political will is missing. If you show us the will, we'll support you, Vladimir Vladimirovich. I got it. Well, have I ever said that we're being surrounded by enemies? No, there are military bases in the south, in the north. The new weapon systems are being erected, actually, at sea. In the west, obviously, there are military bases. We'll talk about foreign relations later on. But it's very difficult to actually surround us completely because we are a huge territory. But of course, modern weapons allow such a possibility. What about new waves? As far as new waves of corona infection are concerned, what are they caused by? Because of the mutation, the ability of the virus to mutate. It's mutating all the time. It's a very simple answer. No-brainer. And the new strains appear all the time. Particularly where healthcare systems are insufficiently prepared and the immunity levels are very low. For instance, African countries, they're still suffering a lot. Because the immune deficiency, they still, I mean, the HIV, AIDS problems are still very rife there, and they develop new strains of the virus, of the coronavirus.
OK, that is Vladimir Putin of Russia in and giving his annual press conference, as, of course, we look for anything he has to say on energy, gas supplies to Europe and the military build-up on the border of Ukraine. He's talked about inflation, he's talked about the growth outlook for Russia, and there was touching, of course, on the spread of the Omicron variant. Let's check in on these markets then. On December the 23rd, it was a lead up to the Christmas holidays. Optimism, of course, liquidity volumes are slim at this time of year. You're seeing gains of 0.4% across the benchmark. We're looking at the spread that's widened between the BTPs and the bunds on some more hawkish commentary from some ECB officials. Futures stateside pointing to gains of 0.1%. This is Bloomberg.
I think this is going to be a little bit of a dark winter in terms of just uncertainty. There's a ton of speculation out in the marketplace, no matter where you look.
Q1 really looks in question, given the impacts of Omicron.
This is Bloomberg Surveillance, early edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Thursday, December the 23rd. Our top stories today. Omicron optimism. Astra's COVID booster increases antibodies, while a trio of studies shows the Omicron variant appears to result in fewer hospitalizations than Delta. President Biden speaks out on his re-election prospects, saying fate, health and Trump will guide if he runs in 2024. And Ukraine tension and the energy crunch are in focus as President Putin holds his annual year-end news conference, currently underway now in Moscow. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards with Danny Berger in London. Kailey Leinz with us in New York. Matt Miller is off this week. And Kailey, we've had good news, haven't we? Certainly it's been taken as good news by the markets. Risk assets rallying on better news, at least at the margin, around Omicron and the rate at which it sends people to hospital and the ability to fight it with vaccines.
Yeah, you are seeing equities in the gaining today, Anna, but I would note as well that it is on pretty light volume considering it is the eve of Christmas Eve. Now, that was evident in the Asian session overnight. You did see stocks rising broadly across the board. The MSCI Asia Pacific Index up by about 0.9%. There's actually two individual stock stories I wanted to highlight from Asia, and that is Tencent and JD.com. Tencent announced it is offloading $16 billion worth of shares of JD.com as a special dividend payout, a one-time dividend payout. So a surprise move to offload most of its stake in that online retailer may help ease some regulatory concerns for Tencent. So that stock was up about 4.25%, but JD.com, on the other hand, down by about 7% in the Hong Kong session. Finally, I wanted to note that because there is more risk-on feeling today, you aren't seeing a bid for the safe haven Japanese yen. It is weaker against the dollar by about 0.2% at 114.32. Now, here in the U.S., of course, we aren't that far from record highs after the gains we saw on Tuesday and Wednesday. You are seeing some of those gains continuing, but not super strong at this point in the future session, up just about 0.1% on S&P E-minis. In the bond market, we are seeing yields inching higher. We're up about 1.5 basis points on the 10-year yield to just below 147. Crude is slightly lower, coming off of a one-month high, right now trading at 72.68. And then interestingly, though, even though there is some risk on sentiment today, Bitcoin not taking part. It is actually lower by a little more than 1%, trading at $48,400, Danny.
Kailey, it is also more or less a risk-on day here in Europe. Of course, as you were saying, eve of Christmas, which means that we are seeing volumes in some cases off by a third, in some exchanges half as much as it usually is in the 20-period average of this time. However, we're looking at gains about 0.25%, I would say, for most of continental Europe. Same goes for FTSE 100 stocks as well. This would be the third consecutive day of gains for European equities. Of course, you'll recall prior to that, it was 2 consecutive days of losses, but this would be the longest winning streak in a little over a month when it comes to European assets. Now, we did see some gains in the pound at some points today, really driven by some of the UK data we got earlier in the day, pointing to a stronger recovery, a quicker recovery from COVID than had originally been expected. You continue to see the cable rate filter that through. We're looking at 0.4% gain at 134.01. And of course, as I have done every day this week, I continue to check on the lira. We're looking at another day of gains for the lira, up 5%. Again, on track for its best week since the 1980s, given that earlier this week we had the single best day of the 1980s, since the 1980s rather, given that we had Erdogan's government stepping in, trying to support the lira. And finally, the other assets I'm pretty sure I've been checking on all week also are natural gas in Europe. We're looking at now losses of about 18% in Dutch front-month futures. This had been sky high, and sky high prices mean that we're seeing more attraction to the European energy market. A lot of these LNG tankers that were perhaps on their way from Asia now diverting, going to Europe, helping at least in the short term to ease some of the supply crunch. But I should say we're still seeing demand destruction. One aluminum plant in France had to shut down due to the fact that prices for energy were just prohibitively high. Because of that, we're seeing aluminum rally, aluminum prices at a 2-month high, Anna.
Yeah, absolutely. The natural gas story, the price of that commodity having an impact on the industrial complex across Europe already. Interesting to see what happens to that and those LNG tankers as that price comes down then, Danny. Let's have a look at what is in store for us today. And first to something that is actually already taking place. Russian President Vladimir Putin is holding his annual press conference. The key themes will include and have included Russia's standoff with the West over Ukraine, NATO and international relations, although a lot of what he's been talking about already has been fairly much, pretty much the domestic agenda, talking about COVID and inflation. We will later today get some US data, including durable goods and initial jobless claims, and the US bond market closes for Christmas at 2 p.m. New York time. Stocks trade as normal. It's just a little bit of an update on trading hours for you on this day before Christmas Eve. Let us get the latest on the virus then. The Omicron variant appears less likely to lead to hospitalizations than the Delta strain. Meanwhile, a third dose of AstraZeneca's COVID-19 has been found to increase antibodies against Omicron, but the head of the World Health Organization warned against blanket boosters.
Blanket booster programs are likely to prolong the pandemic rather than ending it by diverting supply to countries that already have high levels of vaccination coverage, giving the virus more opportunity to spread and mutate.
Food for thought from the WHO. Let us bring into the conversation Susie Ring, our healthcare reporter, to bring us up to date on all of these various news lines. Then, Susie, good morning. Let's start with our ability. I mean, we were hearing there about the dangers of boosting too much, perhaps, in developed markets. But in terms of the use of boosters, we've had mixed data today. Good data on AstraZeneca, which maybe for global audiences might have some relevance. Not such good data out of China, though, or out of Hong Kong specifically on Sinovac. Give us the latest.
Yeah, so we got data from Astra this morning that really follows suit with what we've seen from Pfizer and Moderna, kind of reconfirming that, while 2 doses, of course, still does provide some protection, it's very much weakened by the Omicron variant, and a 3rd dose looks to be necessary to make sure that that protection is neutralizing antibodies against Omicron was seen from a 3rd dose in this study, and that they were in line with those individuals who higher than those individuals who recovered naturally from previous strains. This, as I say, very much kind of follows the pattern we've been seeing from government, recommending that the booster program is very much prioritised among populations to ensure that we can kind of protect as many people as possible as the Omicron variant rages.
Yeah, and Susie, Israel has also started to give even 4th shots to those 60+, and we are getting some headlines out of Israel now saying that the age 60+ age group infection protection was seen falling to 25%. So the transition to Omicron would leave people unprotected, but they say that fresh boosters will raise protection between 70 and 90, between 70 and 90%. But of course, Susie, vaccines, even if you get them, you could still end up with a positive case. The good news is there's several studies that indicate now that your chances of hospitalization are much lower in places like South Africa and Scotland. They've done this research. How does that vary, though, depending on the vaccinated versus unvaccinated population?
Yeah, we had a trio of studies come out yesterday, which was very reassuring, and obviously particularly kind of for the UK government and others at the moment that are trying to hold out against sort of imposing further restrictions before Christmas. The research yesterday said that the Omicron was associated with a 2/3 lower risk of hospitalisation compared to earlier variants. And so we have to bear in mind the heavy caveat that it was still 10 times more likely than Delta to infect people. And of course, the more people that are infected, the more people you are going to see go to hospital. We also have to just weigh that with the fact that we don't yet have sufficient data on ICU admissions and deaths, which of course always lags a few weeks. And again, you know, we're talking about the general population here, but of course there are more vulnerable populations. For example, we've been writing about pregnant women this morning who are just seeing an increasingly worse situation. They were left out of clinical trials, and now they're really suffering the consequences from hesitancy among that group, and we're seeing more and more pregnant women hospitalised and admitted to ICU, and that's a similar dynamic across other vulnerable groups. So there are a lot of caveats to this data, but it is early good signs that Omicron may not be quite as severe as Delta and other variants that we've seen previously.
All right, thank you so much to Susie Ring, our healthcare reporter. Meanwhile, in Washington, President Biden says he'll run for a 2nd term if he remains in good health, and would be even more likely to do so if Donald Trump is his opponent. For more, we're joined by Bloomberg government reporter Jack Fitzpatrick. Jack, President Biden also said that fate has a role to play here. But before we can get to 2024, we have to get through 2022 and the midterms. How much runway does the president realistically have left to get some of his agenda through?
He does not have that much time to get key portions of his legislative agenda through. As we get closer to the midterms, Congress really kind of essentially leaves Washington, and things get even more politicized and becomes more difficult to get everybody on board with a bill. So the Democratic lawmakers we've spoken to recently, including the House Budget Chairman, have said there's an opportunity to keep working on their main tax and spending bill, even with the delay that we saw from Senator Manchin. But there's a pretty narrow window. If it gets into the spring rather than the winter of early 2022, they're facing a really significant time crunch. And of course, in combination with that legislative agenda and the 2022 midterms, the fact that the president isn't polling very well really has been a weight on his party lately.
And Jack, halfway across the world, President Putin, starting in the past hour, has been giving his annual press conference. He's talked about everything from the mortality rate being high due to low vaccination levels. He said the U.S. Fed will have to do something about inflation. Now, as far as I can tell, he has yet to comment on geopolitical tensions with the U.S. What's at stake in regards to that, given that satellite imagery now shows Russian troops building up on the Ukrainian border?
Right. He has not, as of the last few minutes, made news on the troop buildup or on any energy-focused geopolitical issues. But obviously a major focus is that troop buildup of more than 120,000 troops within about 200 kilometers of the border of Ukraine. Even though Putin himself has not said anything in this press conference, there was some pushback from the deputy foreign minister from Russia in an interview that was published today in International Affairs magazine, saying that while the U.S. may want preconditions to be agreed to, some prerequisites in the January peace talks, Russia does not want to do that. They want, in his words, contractual agreements. So obviously Russia has continued to push back and say they have the right to move troops within their own borders as much as possible. But so far, Putin has focused more on his own domestic agenda, on the state of the coronavirus in Russia and on inflation, which is expected to be about 8% there this year, rather than delving into the foreign policy issues so far.
All right, Jack, we'll continue to keep an eye on that press conference. Thanks to our Jack Fitzpatrick of Bloomberg Government. Now, the energy crunch is also in focus as Putin speaks there in Moscow. Russian gas flows to Europe dropped sharply this week, and this is after buyers under long-term deals hit their contracted supply limits for the year. Let's get more with Anna Shirayevskaya, our EMEA natural gas reporter. Anna, how much of Russia not supplying more to Europe when it comes to natural gas is driven by geopolitics versus capacity?
Well, at the moment, we see that some of the European buyers of Russian gas have already reached their contractual limits, and we are seeing a sharp drop in supplies. Typically, Gazprom, with its clients under long-term contracts, set agreed annual volumes that buyers must take or pay for, and the seller has to deliver. And this supply comes at a certain formula, which actually made these supplies cheaper early in the year than the high price on the spot markets which we're seeing right now. So it did make sense to take that up volume early in the year. At the same time, uncertainty remains. This volume has a certain degree of flexibility, and it can be adjusted on a monthly and quarterly basis. And so at the moment, we have some concerns as to what supply will be in January, as only 21% of the pipeline, of a major pipeline to Germany, was booked for now.
So good morning to you, Anna. So we watch what's happening with Russia very closely. We also watch how global energy markets respond. And we've seen on the Bloomberg terminal the way that LNG tankers have been headed in one direction and then turned around to go somewhere different, to go to Europe, where we are seeing prices rewarding that kind of behavior. How much more of that are we going to see? How much can LNG fill the gap?
That's right. We're seeing a lot of tankers diverting away from China, from Asian markets to Europe, just because prices are so much higher on the continent compared to Asia, where buyers are more prepared for the winter, and the weather so far has been milder. As well, we're seeing a lot of LNG coming from the US, which is a flexible supplier and is the closest market to Europe. And obviously, it just makes sense for sellers to divert all of that gas into European markets right now. We'll see a wave arriving by the end of the year and early January, and then it remains to be seen how Asian weather plays out later in the winter. But for now, yes, we're going to see a lot of LNG coming to Northwest European markets by early January.
All right, thank you so much to Anna Shirayevskaya. Danny did it perfectly, and I messed it up. Thank you so much. She's one of our natural gas reporters. Apologies for butchering your name. I'm going to get back to something I actually can talk about in a cohesive way, and that is stocks moving in pre-market trading here in the U.S. One of the big outperformers to the upside is Novavax. It has released some efficacy data of its vaccine against Omicron, and it does look like that protection wanes. The good news that analysts are really positive on is that its booster shot seems to provide substantial antibodies. So that stock is up about 6% in early hours. Another stock that is moving higher is Tesla. Elon Musk shocker, is selling even more shares, this time nearly $930 million worth, getting very close to have completed his offload of that 10% stake that he promised Twitter he would do. So that stock is up about 1.7%. And one final mover to the upside is DoorDash. It has won early on an agreement with a $100 million settlement to settle claims that it misclassified delivery drivers in Massachusetts and California as contract workers, independent contractors. So that may remove some kind of overhang on the stock. It is up the better part of 2% in early hours, Anna.
One to watch then, and all I'll say on the Tesla story is, are we nearly there yet, Kailey? It feels like that one runs and runs. Now, coming up on the programme, positive findings coming out about Omicron. We'll get back to that story. We'll discuss the market reaction, what this means for risk assets. Agnes Belaisch joins us, Chief European Strategist at Barings, and how retail is being affected by the virus surge with Raam Ratnam of S&P Global Ratings. We'll talk global retail. This is Bloomberg.
Welcome back to Bloomberg Surveillance Early Edition. Well, we've seen the spread between BTPs and bunds get to the most extreme point in about a year as we continue to see some hawkishness from the ECB price, and of course, not as hawkish as the Fed. But how far can they go, if at all? So I'm looking at a chart for our radio listeners of various countries throughout Europe, the debt to GDP ratio. And for a lot of Northern Europe, it is pretty low. You look at Germany, it's easily below 80%. Same goes for places like the Netherlands. However, when you move more south, the debt picture starts to look more cumbersome. For example, Spain debt to GDP levels are at 122%, and Italy, really the standout, is 155%. Of course, this all comes as the ECB looks to tiptoe into tapering. Well, to discuss is Ben Raam, currency and rates strategist at Bloomberg and Live. Ben, how much can the ECB really embark on any form of tapering given this debt load across the country?
The short answer to your question, Danny, is that not very far. Because if you look at the inflation picture, yes, we have elevated inflation in the Eurozone at the moment, but they're going to look through it. And that means that, and there is one piece of statistic really that sums it all up. And that is, if you look at the front end bonds in around the world, across the G10 world, you will see that yields, we have seen bonds sell off at the front end, but it is the bonds of Greece that have actually rallied this year. And they kind of stand out like a piece of rock in that ocean of insanity. And that is really a telling statistic. And that tells us that, look, the ECB is not going to get very far with tapering, because what have they said in the last policy statement? They have told us that, look, there's going to be Uber accommodation. Yes, they are going to retire PEP. But then in comes APP, the longer running program. They're going to step it up substantially in the second quarter and third quarter. And that means throughout 2022, you're going to look for ECB stimulus, continued stimulus in the markets at a time when the BOE, at a time when Canada, at a time when the US, at a time when New Zealand, they're all going to be tightening rates. ECB is not going to be in a position to tighten rates.
Okay. We'll watch that then into the new year. Ben, thanks so much. Ben Raam of the Bloomberg Markets Live team giving us his thoughts on European debt and tighter ECB policy. Remember, you can get market analysis from the Markets Live team. MLIV Go is the function to use on your terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Anna Edwards and Danny Berger in London. Now let's get the first word news. And the Supreme Court says it will hold a special session on January 7th to weigh challenges to Biden administration policies covering vaccine requirements for millions of workers. The announcement comes amid rising COVID cases and is an extraordinarily fast timeline. The court hadn't been scheduled to hear cases again until January 10th. The Chinese city of Xi'an has imposed a lockdown on its 13 million residents after mass testing identified 127 COVID infections. Residents have been told to remain in their homes and designate one person to go out every other day for necessities. It's China's biggest such move since the pandemic started in Wuhan approximately 2 years ago. And Intel isn't apologizing after its opposition to Xinjiang labor sparked a backlash in China. The chip maker sent a letter asking suppliers not to use any labor or products sourced from Xinjiang, quote, in order to ensure compliance with U.S. legal requirements. Intel's continuing access to the Chinese market is crucial to its growth as it struggles with increasing competition. Coming up, we'll get back to the markets with Agnes Belaisch, Chief European Strategist at Barings. Her thoughts on year-end and the year ahead as we inch closer and closer to 2022. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards with Danny Berger in London and Kailey Leinz in New York. Matt Miller is off this week. And Danny, it's interesting to think about all of the good news we've had over the last 24 hours or so. The trio of studies showing reduced hospitalization risk from Omicron, the better news out of AstraZeneca, or the new information from AstraZeneca around the effectiveness of boosters. But some of the negativity has been coming from China. We've heard about the Sinovac vaccine. Once again, some gloomy headlines about its efficacy, even with a booster dose. And now we see this new line saying that China is urging reducing citizens' mobility during coming holidays. So this isn't now entirely regional in China. They're urging reducing citizen mobility.
Right. And in terms of the regional picture, we definitely have seen lockdowns, the most recent of which earlier today, Xi'an. 13 million residents. So this will be the largest lockdown really since Wuhan itself was locked down. This brings again to questions when we had in the beginning of the pandemic. Do lockdowns in China and Asia in general mean more inflationary pressures? Is it an issue for manufacturing? Does demand in China waning because of that mean that we have issues for the entirety of global growth? It really does feel like we're just getting flashbacks of a year or 2 years ago.
Yeah, absolutely. And of course, for healthcare reasons, the Chinese taking the stance that they're taking, but they are taking a very different stance to the rest of the world with their zero tolerance policy. That's what we're focused then in terms of markets, Kailey, isn't it? We're focused on the latest news flow surrounding Omicron, whether it's coming from China or perhaps more in the market psyche right now on the 23rd of December, the better news flow surrounding Omicron and the ability of Western countries to cope.
Yeah, the idea that hospitalization risk is actually much lower with this variant, and I think that is helping to aid risk appetite. We actually saw that in the Asian session. We're seeing it in the European session, where actually, interestingly, travel and leisure is your biggest outperformer on a sector basis, and we're seeing it here in the U.S. as well, with futures positive after 2 days of gains. We're getting closer and closer to those all-time highs. Right now, up 0.2% on S&P E-minis to just under 46.95. And I wanted to point out, too, that volatility is relatively subdued, right around the lowest level in about a month, with an 18 handle on the VIX. In the bond market, we are seeing yields inching higher, so a little bit of selling pressure. We're up a little more than 2 basis points on the 10-year Treasury yield to 147. And then I know we've been talking about it all morning, really, but natural gas futures coming way lower in Europe. Granted, we're coming from all-time highs, very, very elevated price levels, but nonetheless, a 22% drop today is notable. LNG from U.S. to the rescue, and I know Danny's going to have a little bit more on that in just a second. But as I mentioned, you do have the travel complex outperforming in Europe, and that is also evident in the pre-market session here in the U.S. Cruise lines like Norwegian and Carnival each higher by around 1.5 to 2% in early hours, and some of the airlines getting a lift as well. Delta and American each up a little more than 1%, Danny.
Kailey, I love it when you set me up so well. I almost don't even need this chart, but you know, this is such a good chart made by our markets editor, Valerie. So I'm going to go ahead and do it anyway, even though Kailey gave us that great roundup. So as she was mentioning, we've seen front month futures just plunge. I'm looking at ICE natural gas here. We've seen it plunge some 20%. And again, for our radio listener audience, I'm looking at 3 different natural gas pricings. The 2022 one is the one that's plunged significantly. However, if we look out at other futures, we look at 2023 and 2024, those have continued to steadily climb. For example, 2023 is now very close to crossing and becoming more expensive than 2022. So it does seem like the market is expecting some structural issues to last and for the energy crisis in Europe not to go away anytime soon, despite perhaps a very short-term reprieve. Let's dig into this more. Joining us now is Agnes Belaisch, Barings Chief European Strategist. Agnes, thanks so much for joining us. How much of a concern is the energy crisis for you when it comes to the European economy?
Yeah, so the interesting thing about these gas prices is that they're actually equivalent to oil having risen to about $260 per barrel, which is actually a lot. And the question really is whether can they grow more from here and actually double so that inflation would actually keep accelerating. If they don't, because that's actually hardly envisageable, then actually inflation, will remain high, but will not continue to accelerate. And then the question in everybody's mind is, if inflation remains high and growth decelerates, will central banks, the ECB, like the Fed, will they actually be willing to return to more accommodative policies?
Agnes, very good to speak to you this morning. Thinking about the global trajectory in 2022, we were talking about this, Danny and I, just a moment ago. We've had some good news surrounding Omicron and the ability of maybe Western economies to withstand it. But maybe the signs for China are not quite so great. And obviously China plays an important role. We think about the humanitarian story there, but also it plays an important role in the supply chains globally. How concerned are you about the zero COVID policy that we see enacted in China and what that's going to do to port operations, factories and the like?
Yes, I've always been saying that we won't be out of this until everybody is vaccinated, because otherwise this forces emerging markets that don't have access to the best, most efficient vaccines to actually be tougher than otherwise necessary with managing the COVID pandemic. So it is an issue. And in fact, this fifth wave that we see here in Europe that will actually spread all around the world is adding to disruptions that already were left over by previous COVID variants. And labor shortages will probably worsen and actually increase those supply disruptions on top of the energy price issues that we were just discussing, where higher prices are not being replied to through higher supply. So what's happening in emerging markets and China in particular are actually an issue. But one has to hope, though, that that little by little the spread of the variant will create some type of immunity, and governments will, over the course of the next year, be able to release their very tough COVID management policies.
And yes, I wanted to ask you about credit markets, because I've spoken to two guests this morning with slightly different views. One said that there are no opportunities in corporate credit. It's all been nationalised, so much government and central bank involvement here. Another said, actually, there are opportunities in corporate credit if you step away from maybe the bigger names. What is your attitude towards, or your investment thesis around credit as we head into 2022?
Okay, so I have a little bit of a different story about where we are right now and what's happening, and I think this will allow me to respond to your question. And the idea is that we are not in the regular stage of the business cycle, and where we are at is actually amplified by very unusual ingredients like high savings buffers, as well as actually very little demand for credit, because firms like households are cash rich. In fact, in the US, firms have been deleveraging since March. The credit growth actually been negative on average 10% for the past 10 months. And in the euro area, the corporate credit growth is actually null, and consumers are only borrowing to buy a house. So these two factors, very high savings buffers, very high cash buffers at firms, very little demand for credit, provide actually room for this expansion to last longer, even though it might be interrupted by slowdowns that result from viral fears, but without having to go through recessions like in a regular business cycle, which also means that this economy will be stop and go. And, the downturns that we can see in credit spreads widening, or in the stock markets, which are also risky assets, can actually have further to go. And actually, this volatility that we see in their pricing offers entry opportunities for later.
Well, and yes, and part of the reason why this credit cycle has looked so different is that the Fed, for example, was very involved in the market providing that backstop. And I'm wondering how you view waning monetary stimulus, waning fiscal stimulus, and what that is going to mean for what the cycle actually looks like going forward. Is it going to be more like a normal cycle?
Well, that's the thing, because leverage is so low in this current type of business cycle, which is really not a cycle, but a structural shock, because leverage is so low. When you have central banks tightening, it doesn't kill demand the same way, or slow down demand, I should say, the same way that it does in regular business cycles where leverage is so high that central banks can hike rate and work through the credit channel to slow down demand. This does not work like that this time. It will probably work through financial markets, not feeling very good about it, as well as morale or sentiment or confidence that central banks might be withdrawing support. But if you look at what central banks have announced, the key word is optionality. And they have made their policy forward guidance quite clear, I think, that if need be, they will actually reverse their type of policy stance. But at this stage, what is announced is not such a big tightening. And even though they are intervening a lot, they are still tapering, and they still hold about 40 to 50% of the sovereign debt market and a large part of the corporate debt market. And they will have so far to reinvest those stocks of assets. So that really, if you think about it clearly, markets remain quite well supported.
All right. Thank you so much for joining us. Agnes Belaisch, Barings Chief European Strategist. Appreciate your time. I do want to bring some breaking headlines. We are continuing to monitor Russian President Vladimir Putin holding his annual news conference in Moscow. He is addressing now what appears to be tensions with the West and the situation in Ukraine. He says that Russia is facing, quote, constant pressure from the West, and that further eastward NATO expansion is unacceptable. He says the West needs to give Russia security guarantees now because it was crudely tricked Russia over NATO expansion. And finally, he poses a question, Anna, no more missiles at our borders. Is it too much to ask?
Yes, a continuation of this theme, speaking out against the what Russia sees as the expansion into its sphere of influence. I suppose that the NATO view, certainly the US view, is that Russia shouldn't have a veto on how far NATO goes eastwards. But we'll have to see how these lines go down with the White House. We'll continue to monitor this for details. Live Go is where you can find details of that press conference, which continues to take place. Coming up on this program, Retail Renaissance. We'll discuss how COVID has reshaped consumer behavior with Raam Ratnam of S&P Global Ratings. This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, Representative Warren Davidson, Republican from Ohio. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards with Danny Berger in London and Kailey Leinz in New York. Now, 2021 has been a year of rebuilding as the world moves towards vaccinating the population against the largest pandemic in decades. Bloomberg's Ariel Berger reports on what's ahead for 2022.
According to Bloomberg's vaccine tracker, roughly 3.2 million doses of the COVID vaccine had been administered by the U.S. by January 1st, 2021, far short of the Trump administration's goal of giving out 20 million shots before New Year's Day. And the global vaccine effort hit a snag in the spring when vaccines developed by both AstraZeneca and Johnson & Johnson were suspended over blood clot concerns. Within a few weeks, both shots were declared safe to use following reviews by regulators in both the EU and US. Before the end of April, Biden hit his goal of administering 200 million shots in his first 100 days, as vaccines had been made available to all adults. The fight against COVID was gaining traction in the summer as vaccines rolled out globally. That didn't last long, as the ultra-contagious Delta variant surged across the globe. By July, the CDC had advised vaccinated people to put their masks back on in indoor spaces as breakthrough cases rose and the agency learned that vaccinated people could still transmit the virus. In the fall, the FDA issued emergency approvals both for booster doses and vaccines for children aged 5 to 11. But late in November, global financial markets sold off after South African researchers identified a new, severely mutated COVID strain that had the potential to evade vaccine protection, the Omicron variant. In response, many countries reinstated travel restrictions from African countries. Japan closed its borders to foreign tourists from all nations, and UK Prime Minister Boris Johnson advised anyone able to work from home to do so. With 2022 on the horizon, the new year will bring with it a lot of uncertainty and big questions about the pandemic's future, including, will vaccines need to be reformulated, and can any ground be achieved without vaccine equity? Despite a pledge of more than 1 billion donated doses from the US, many countries have vaccination rates of less than 50% of their populations, and that's where the virus is most likely to mutate.
Bloomberg's Ariel Berger there, no relation. Now, of course, that past picture in the year has been consequential for retail as well. Let's dig into that. Joining us now for a look at global retail's battle with COVID is Raam Ratnam, S&P Global Ratings sector leader for EMEA Retail and Consumer. Raam, as Omicron starts to spread throughout the globe, here in the UK, there are rumblings of a voluntary lockdown, if not a mandated lockdown. You do have some European countries locking down as well. What does that mean for shoppers' propensity to continue to go out, to continue to buy things during the holiday season?
Hi, Danny. So obviously you touch on a very critical point, and this comes at a point where we're looking at perhaps the most important month of the trading year for retailers, and clearly one of the metrics we are watching very carefully is the drop in footfall. So clearly, destination shopping centers, malls, we expect to see footfall dropping by 25% compared to say a baseline of 2019. So this is really unfortunate for the sector, especially when a lot of the retailers were investing into the expectation that the Christmas would be a bumper one, especially especially because the third quarter was fantastic in terms of numbers, in terms of retail performance, and that kind of momentum continued right through to November, just before we heard the spread about Omicron, which is a new issue retailers have to deal with.
Well, given that this is the most important month and it's being curtailed and it's already been a tough year, despite, as you were saying, that strong third quarter, can retailers survive another lockdown at this point?
So clearly, I mean, there are some positives, even though the situation looks fairly, it's not a great time. But I think one of the positives we can look at in all this, and this is well reading into 22, is e-commerce is in a really good place, and retailers have invested in their supply chains and e-commerce and their distribution capabilities. They should be able to weather the storm. That said, I mean, the sector is very different. There are smaller retailers who would undoubtedly be significantly affected by what's going on, by consumers not stepping out of their homes. So there will be a kind of a slow recovery. There would be uneven performance as well. I think that big versus small retailers with solid brands, they will continue performing well. So there is that, there will be two-tier, performance outlook coming out of this pandemic, and which we've already seen actually. E-commerce really doing well and helping many retailers, offset some of the pressures they see in the physical stores.
Raam, do you see Omicron, for retail, is Omicron going to be broadly inflationary because of the disruption that we could continue to see to supply chains?
So Anna, that's one of perhaps the most important fallouts of Omicron in our view, certainly, is that many retailers sort of worked through last few months overcoming the supply chain issues. Inflation has been quite widespread. That said, in our view, we see big retailers, consumer goods companies being very well positioned to deal with inflation as it stood. There's a lot of capacity for the consumer to take some of the price rises we've seen over the months. We expect to see some of them feed through as we go through the festive season. Promotional activity is being really cut across the sector. All that was before Omicron, and now, of course, all the retailers we speak to are reevaluating what they do with the stocks they built up in the anticipation of Christmas. But going back to your point about inflation, I think one of the biggest worries we have is inflation around wages in particular. The commodity inflation is very much priced into products, but wage inflation, especially when you factor in the fact that many employees will not be able to turn up to work, there will be absenteeism, and a lot of those replacement, headcount at the stores and restaurants, etc., they come at a higher price. So that will lead on to undoubtedly some pressures on the wage bill.
What are the self-help measures then that the sector can take, Raam, as they look ahead to 2022? We still don't know a lot about Omicron that we hope to find out in the coming months, and we'll see how that plays out. But what are the self-help measures? Just give me an example of one or two.
So the sector has been remarkably resilient, basically through a combination of government stimulus, which you've seen has been quite an important factor. But you do touch on self-help measures, which has been absolutely important for the sector ever since we've gone into this pandemic. And this ranges from a lot of operating measures. I'd sort of break it into operating measures around costs, managing costs, managing operations, investing into the supply chain, rejigging distributors, working through the supply chain to find efficiencies. So there are a host of operating measures which the sector has done. And one of the biggest ones has also been ramping up the readiness to go into the online world, into e-commerce. Some of the retailers were in different stages of e-commerce adoption, but a lot of them have done really well from an operating standpoint. On the financial side, again, from a credit rating perspective, which is an area we look at a lot, I think we've seen extremely favorable financial policies for the sector. So companies have been really focused on managing the liquidity, which has been quite abundant, as your previous speaker said. But equally, from a balance sheet management perspective, things have been pretty robust. And that includes even at many retailers, they cut down shareholder returns, they focused on working capital management, and a lot of hygiene aspects around financial management that really helped them overcome some of these challenges we've seen over the last few months.
Okay. Thanks so much, Raam. Good to speak to you. Raam Ratnam, S&P Global Ratings Sector Lead for EMEA Retail and Consumer. Good to speak to you about the retail sector as we draw to the close of 2021 and into 22. Later today, we'll continue our retail conversations by diving into brick and mortar with Site Centre's CEO, David Lukes. That conversation at 2:30 p.m. in New York, 7:30 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger with Anna Edwards in London. Now, a look at what we're watching today. Anna, I'm focused on the U.S. consumer. Yesterday, we had conference board numbers on the U.S. consumer for December. Rose more than expected, significant, especially because of Omicron. But we had economy, feelings about employment, all of those rising. And so we have University of Michigan later today. And so I'm watching that because typically UMich does trail behind the conference board's figures. Yeah. But can they catch up? Are they also confident? Of course, Danny Blanchflower over at Dartmouth has long been saying that the consumer, if that attitude starts to fall, that basically forecasts a recession. So can we escape that? Yeah, so based on the US consumer is the US economy. I'm focused on what's going on in Russia right now. We have Vladimir Putin giving his press conference, talking to the media in Russia. He spent a lot of the early hour of the conference talking about domestic issues, but then moved on to talk about NATO. He wants a security guarantee from the West. He said he wants no more missiles on the border. These lines we've heard before, and there are talks that will be coming. He's also waded in on the subject of gas. Gazprom is not responsible for the EU gas price, he says. And Yamal Europe was not booked as clients made no requests. So some of the lines coming out from Vladimir Putin as he continues to give that press conference. We'll continue to watch the gas price and LNG tankers coming from the United States. More Bloomberg surveillance is ahead. This is Bloomberg.